It is March 2023, and here we are doing another Calgary real estate market update. What in the world is happening in our market? Are we seeing multiple offers? Are we seeing things going up? Are they going down? Well, today we got some news articles we're going to go through. We got some great stats, and we also have our latest market report that you can download and dig into if you want all the information. So let's jump right in. So right now, these are some of the articles that I found that I thought were interesting. And what I find so funny is how headlines are used to get you in. And this one got me in, and I wanted to read it and kind of understand, because it says Calgary is one of the most expensive cities for singles to buy real estate in. Okay, well, let's figure this out. As you scroll through, Zoocasa, a big website, basically did a single income study. And what is really interesting is they look at the income required for an average home. And then they look at your median income, the ages 25 to 64 for singles, not the family, not the household, just a single person. And then they kind of start comparing detached prices and what it is that you're going to actually need to qualify for a detached home. Well, there's only one city in all of Canada that qualifies for a detached home, and that's St. John. Regina, Saskatoon, St. John's, Winnipeg, Edmonton, Montreal, Ottawa, Calgary, all of them don't work. And I find that so interesting. And so what I realized is I started thinking, going, okay, I mean, it's a good way to kind of spin something and have some kind of negative news out there, and like the news media can sometimes do. And they just got, it's a good headline. It got me to click. And what I realized is how many single people are actually wanting to buy a detached home versus how many are actually buying a detached home. I don't know the answer for wanting, but for those that are purchasing a detached home, yeah, I mean, it isn't everybody. I mean, you're a single person living in maybe 1,500 square feet minimum kind of thing. If you're spending, for Calgary, they got the numbers here for 570. So if you're spending around 570, you're probably buying a 1,500 to 1,600 or more square foot home in suburbs. And I don't know if a single person would want to live in that. There definitely would be some, but not everybody. And so you end up having single individuals buying more of townhouses and buying more condos because they don't want to have all of that space quite yet. But family income, that's a different story. So it made me wonder. I started digging, and I wondered, what was the median family income, the last numbers that we have for Calgary, and that was $118,000, and that's right here. This is on the Alberta website. If you're looking at what's needed to qualify is $78,000 for an income, and that would easily qualify for the average income home. But then I looked up, okay, Vancouver is the most expensive. So what was Vancouver's number? And in this PDF here, so let's use that same terminology, median family income. For the 2021 census was $113,000 for the median family income for Vancouver. And what do you need to qualify for the average detached home? $173,000. And so there is a disparity. And this kind of leads us right into the next article, because this headline here says Canada home prices to drop 12% in 2023, which is still unaffordable for many. And this is why, right? Because the prices, even if they drop enough, the average, the median family incomes, household incomes, still aren't enough to qualify for the average type of detached property, if we're going to be using that as the property type. And so when you end up looking at some of these numbers from Toronto, so anywhere Kitchener-Waterloo is, and basically it's all Ontario and then BC, is 110,000 or more, up to 173,000 for your family income. So these areas are still kind of unaffordable, but all of that stress, all of that unaffordability leads us to this, where Calgary is still, this is a Calgary Herald, February 24th. So this is just like a week or so. Calgary is still an outlier in national housing trends. And what is true is true. It is. Prices remain fairly stable as sales listings have tightened at the same time that sales have slowed. And so it is a different market. Things are a little bit weird. We aren't necessarily seeing, like, even though sales are lower, prices aren't dropping. There's still that demand that's happening out there. And we'll talk about that in the data. But then there's also this article. So all of these things lead to this. Calgary housing inventory level among the lowest since 2006 is what Krebs put out. And so what is true, I'm not going to dive into the article, but it is true. We have seen really, really low inventory in Calgary, and there's still a really strong demand happening and just not enough of supply. And that's simply what's happening. And so that leads us into what is going to happen this spring market. So let's jump into the data. Let's look at the numbers and kind of figure some of this stuff out. So before we jump into all of the numbers, I want to make sure you are aware that we are creating a market update report that I have right here that you can go down into the description and download this report for free. We take all of the stats, all of the numbers, everything that we've learned, a little bit of our own analysis that the team has put together, and we have it in a market update. And so go take a look. This is what it looks like. It's beautiful. It's wonderful. Go take a look and download that if you want some of these numbers in more detail. All we ask is just for you to sign up and get this and download it, and it's a free download, and Bob's your uncle. But I don't have an uncle named Bob. Anyways, let's jump into there. The first thing I want to dive into is something that I actually came across from a research company called Edge Realty Analytics. And what it talks about is right here is rentals, single family, and condo dwellings under construction. I mean, look at this number. I want to make sure you can see that. Look at how large the rental market has peaked out in some of these areas, or some in the last little bit here. So this is January 2020. I would assume this is January over January. So this is probably 2020, 21, 22, 23. So this is 23 here. And so it's actually, I think according to this, it's outpacing the number of detached homes being built. What I find interesting about that is we have such a large number of people who are moving here. So much so, in fact, that you can clearly see in this chart from, I think this is from Korea, where they're coming from. Again, people from BC and Ontario in Q3 of 2022, that's these numbers right here. And what is crazy is when you look back all the way to 1950, that's down here. There's a little bit of a blip between mid 70s to early 80s. And then there is some forward momentum throughout, I don't know, this is year 2000 to kind of up until 2014, somewhere in there kind of thing. But my squiggly line, that is the most recent number for net migration of people moving here. That is a large number. So if we go back here, having more rentals in our city is definitely needed. So I'm not opposed to this, but it is very interesting when you drive around and you start seeing these condo buildings going up or different things. And we shot a video about some of the rental types that are out there. Even some office buildings are being converted into rentals. And so all of this, the rental units that are being built in Calgary, I think it's needed. And it's a good thing because a lot of people, when they move to a new city, they're going to rent. And when you rent first for the first year or two to make sure this is where you want to be, you're settled, you figure out where you want to live, then you're going to buy. So give us a shout. Let us help you figure that out. Use all of our community videos that we have when you're making the move here to kind of help you figure out where you want to live. If you want to have those conversations too, we can chat about that as well. But it's very interesting that there are so many rentals being built in the city. Now, as we look at some of the numbers and things that have happened with Calgary specifically, you can see that our benchmark price has actually increased over month. And when you kind of zoom in here, the blue lines are your inventory, your red lines are your sales. So our sales are definitely keeping up pace with what inventory is brought to the market. It's still definitely not enough, and there's a lot more demand sitting underneath that's just not being satisfied with what is in the market. And so you can see here saying the same thing, basically, new listings coming on the market versus the sales, and we are just riding a wave like it's just still going. Benchmark pricing. So you can kind of see the median prices and the average prices and how they're kind of moving around a lot more, but our benchmark price has definitely risen. And if you kind of do a comparison here, so I'm going to carefully make a straight line this way. Here's the thing that I'm wondering. If we have low supply in the market right now, and we have a lot of demand, a lot of people wanting to purchase something, what is that going to do to our market? Well, right now, it's going to push us into a lot of multiple offer situations because, again, there's maybe one house for 5, 10, sometimes 20 or more buyers who are interested in it. And that's how many offers we've seen on some places this month. And so that's what's going to happen there. However, if we end up having more inventory coming to the market in Calgary, how is that going to change things in the future? Is there going to be too many properties that come on the market that are going to basically push our values down? I don't personally think so. Could we end up seeing, because this line right here is $550,000 for benchmark price. Could we end up seeing this line doing this at some point? I don't know if it'll do that final little tick. It was just kind of a fun little thing to draw. But could we see that break the $550,000 benchmark price? Well, we just saw it go up $10,000 this last month. And if we're at 530, that's only $20,000 more, and we haven't even hit the spring market. So my personal prediction is that we could end up seeing a breakthrough of the 550,000 benchmark price in Calgary. I think we're going to see it. I think we're going to see kind of a change and a push in this pricing. And so whether you have rentals, whether you have and you're planning on moving and you're in the city, like you live here, there's a lot of buyers that are looking. The problem right now is finding properties that you want to move into. And so we are always on the hunt. We're always looking for our clients. We're always trying to find ways to creatively find properties that work for them. And so if you're in a situation where you have something and you want to sell, you're trying to figure that out, we might even be able to just match it up with all the buyers that we have that are reaching out to us because we just have low inventory in the market. And so reach out, info@chamberlaingroup.ca is our email, or 587-316-5400. But at the end of the day, the market is very interesting right now and what's happening. And because of that, I wanted to look back over the last month. What has happened with multiple offers? Homes that are selling at their list price or above. And so as you can see here, detached homes, 43% of detached homes in Calgary between January 28th and February 27th sold for at their list price or more. So if it sold at list price, it could have been potentially a single offer. It came on the market right away and they made an offer and they said, I just want to, let's just do it and get her done. And so there might have just been one offer. It doesn't mean it's multiples, but it means that it was priced well and they tried to get it quickly before other people came in. And that happens. And then I wanted to look at townhouses, and that was over 50% of all townhouses sold at their asking price or above, and 28% of all apartment condos sold at or above their asking price. So then I dug deeper. I said, well, what areas of the city is this happening? Well, for townhouses, you can clearly see in red that it's in the south and the north where we are seeing most of this happen. For apartments, it's just because there's so many of them downtown, but that's where you're going to see the city central zone. That's where that's happening the most. And then for detached homes, it's kind of mainly actually down south, but your second kind of place is in the northwest. And so that's the areas of the city where you're seeing a lot of activity happening for these different types of products. But then that got me thinking, is it only happening in Calgary, or is this happening in surrounding areas as well? So I looked at Airdrie, and 45% of all the sales in Airdrie over that same time period sold at or above their asking price, 33% in Cochrane and 31% in Okotoks. So this multiple offer, the low inventory, high demand market that we're sitting in is still happening, and it's happening in the surrounding cities as well. And so what does that mean? What does that mean with our months of inventory? Well, Calgary it has dropped. We are now under 2 months of inventory. When you look at the city, we started like crazy low numbers, like that article we saw, right? We have crazy low numbers of inventory, which you can see down here, and we're still in the low pockets, right? We're not in these, like, the inventory isn't jumping up in here, because actually this is 2022. This is last year, the blue line, because so much inventory came on the market because we also had lower interest rates, a very different economy, a different feeling in the market, right? And so last year was very, very different, but this year it's just low inventory. But our sales, again, like all the other charts, are just kind of eating it up. But when you compare it to last year, which is 2022, I believe this yellow line is 2021, and then you got a dark blue line, which is 2013. Those are the only years that had more sales than currently right now, this last month. And when you look at, I think this is a very interesting chart, because what happens here is the actives on the market have kind of stabilized. They haven't gone up, but we pull this number every single day, and this is how many actives are on the market. And then we pull how many solds happened 30 days back, and you just kind of have a rolling 30-day number. And same with pendings, how many are 30-day rolling number. But if you look at the actives there, and then you look at how quickly the sales have eaten up. Now, if this started right about here, so this would have been roughly kind of February 1st. So let's call it the last week of January, somewhere in there is when you started to see the sales numbers tick up. A lot of these places were pending for, let's call it 10 days or so about a week or two. So starting somewhere around here, you can see the pendings pick up a little bit, but once the sales started to getting reported on the market, they just didn't stop. It just kept going and going and going. And any inventory that's thrown at the market is eaten up quickly. And that's very, very evident and clear when you look at what's happening. I would generally say this is happening most across the city in most communities. But if you have a property that you're trying to figure out, what we want to do for you is actually dive deeper into your community, because there is these smaller markets that aren't the same activity as what the city's doing. And we have to look at that differently. And so this is just a general feel, a general look at what the city's doing, because your home in, I don't know, Hawkwood, wherever you live, is going to be a very different market. And we have to know what's happening there to be able to advise you on what's going to happen when you go to sell. And now, months of inventory, when we look at the 7-day months of inventory, you end up having the big drop, right? So like we said, mid-January is when those pendings started happening. And that's when we saw the red line really, really drop down into here. And then what followed suit? The 30-day inventory. And this is always kind of a lead and lag indicator. But right now, you can see that they are sitting together. They're hanging out there. Last month when we were doing this, we said the 30-day is going to drop because there's a gap. But right now, going into this next month, it says those 30-day and 7 days months of inventory is sitting at around 1 month. And so that is showing us that the 90-day number, which is here, could actually decrease. So if we end up seeing, because it could actually come down into this range. So if we end up seeing a number like this staying there, the 7-day and 30-day, the 90-day one is also going to dip down. And that's kind of really gives a good indication of what the market's doing, is about a 90-day inventory. And so this is collective days on market. So collective days on market is not just if a home went on the market, it got pulled off the market and went back on the market, it counts that whole time. And so we've actually dipped now under 40 days since September. Last year, we've been above 40 days, collective days on market. So now those days on market are dropping. So if you like this information is helpful, I would highly encourage you to go watch this video here, which is our last market update, to get some more stats, more information. But I also encourage you to go down into the description, download our market report where we have these charts and a lot more, because we actually break out single family, attached homes, all of that stuff as well in the report. So there's more information there for you, and we'll see you guys on that next video.